Hello everyone. Thank you, Lucas, for providing us some time for your webinar. So anyway, in about 10 minutes we'll have the UK retail sales data coming out, and I would love to remind you at this point that it is the primary gauge of consumer spending, which accounts for the majority of overall economic activity. And at the current moment, the forecast stands at 0.4%, and the prior figure stood at minus 0.2. So if we will go deeper in the historical part, retail sales are one of the most important indicators, and it was posted at a 0.2% decline in June, well of the estimate of a 0.4% gain. The markets are expecting better news in the July report with an estimate of plus 0.6%. We will now move on, and I will share with you guys their economist view on the matter from different financial institutions and banks on the UK retail sales estimate. At the current moment, the forecast for the median estimate stands at 0.4%. Average estimate stands at 0.5%. High estimate stands at 0.9, and low estimate stands at 0.2, whereas the number of estimates this time has reached 15. So if we'll start, if we'll continue, that is the projection part of the economic data release. So growth remains upbeat overall for the UK, but the retail sector's expansion has been decelerating this year after rising a strong 6.3% for the year through this past January. The volume of retail spending has been trending lower, dipping to a 4% annual rate in June. That's still a solid gain, but the latest sentiment survey for the retail industry via the Confederation of British Industry implies that another round of deceleration may be brewing in today's hard data for July. The CBI Distributive Trade Survey's retail sales balance for July dipped for the second month in a row, falling to 21. That's the lowest reading since April, and a sign that today's government release could reveal weaker than expected growth. Economists, however, are looking on the bright side. Econoday.com's consensus forecast sees the annual pace for retail spending ticking higher to a 4.3% rise in July compared with the year earlier level. Even if today's update is on the soft side, it will take a hefty downside surprise to change the crowd's generally positive outlook for Britain's macro trend. PwC's monthly update for this year's GDP forecast for the UK currently anticipates a 2.6% increase in 2050. That's fractionally above the 2.5% forecast from the National Institute of Economic and Social Research via the group's August estimate. A mid-2% advance is a moderate expansion, but compared with the rest of the developed world, it ranks as one of the strongest forecasts for 2015. Today's retail report for the government probably will challenge the relative upbeat outlook for the UK's macro trend. And that was from CapitalSpectator.com, James Picerno, analyst, and we will now slowly move on to the part where our community members share their views on the sterling dollar currency here. Just a second, and yeah, as you can see, the trader went with the bulls this time, 58.7 versus 41.3% bearish votes, and William Lee remaining on the bull side still says that sterling is one of the strongest currencies, and at the moment it reflects the performance of the domestic economy. Healthy prices such as the recent weakness in sales is due to external and psychological factors that have affected consumers. The full risk of Greece. Angela Damasi is saying that expects to increase after 0.2 after a decrease of minus 0.2 month ago. Last 6 months rating of retail sales were as follows. And it seems that retail sales data is mixed between no growth to slight growth. So till now, improvement is not noticeable, and still he's bearish on sterling dollar as the pair holds below 1.5700. Yeah, I guess that's pretty much it on the fundamentals, and I would love to invite Max on the whiteboard to cover the technicals and the initial reaction of the pair. Thank you.
Thank you very much, Polina. Hello, everybody. I hope you have a great day. So yes, we are discussing the UK retail sales, as Polina has just mentioned in the fundamental part. So yes, we have the positive surprise trading strategy today because, as you have probably noticed, there are no negative expectations for the retail sales for July, and the lowest estimate is 0.2% for a monthly change, while the highest one is reached even 0.9%. That's why we have the positive surprise trading strategy today, and the cable for the purpose of discussion, the same as we have had the cable on Tuesday when discussing the UK CPI data. Actually, the market sentiment is pretty much unchanged. It is very slightly bullish right now. A bit more than 50% of all the open positions are long at the moment, and also I should mention that the pound is being bought in the majority of all the cases right now, more than 52%, and also depending orders in both 50 and 100 pip range from the spot price are positive right now. So now let's move on to the trading strategy itself. As you can see, the pair is at the moment trading at oh, sorry, I guess I picked the wrong one. Just one moment. Yes. So the pair is at the moment trading at 1.5668 level, and of course, is usually to project the possible market reaction after the data is released in around 2.5 minutes from now. We can have a look at the previous market reactions for this currency pair, and as you can see, the average reaction actually used to be quite strong. The average reaction was 41 pip for the cable right now, and actually the average reaction ranged from just 32 and 33 pips back in June and in March, and up to 51 pip back in April. And of course, we will take the average market reaction for the last 5 months and adjust the take profits and stop loss levels accordingly. So from the current market price, we can place actually the take profit level some 20-30 pips above the current market price, because yes, we have the positive surprise trading strategy. So it is currently located somewhat around the 200 period simple moving average, around 1.5671, and the stop loss level, of course, accordingly is placed somewhat below the current market price at 1.5639. At the same time, of course, if we have some big decline or big increase in the retail sales, we can have a stronger market reactions from this currency pair, and the pair can potentially rise as high as 157, so it's some 50 pips above the current market price, if we have, let's say, a strong increase in retail sales of more than 0.4% in July. The same may happen, of course, if we have, for instance, the second month of decline in the retail sales, and the pair may fall as low as 1.5620 at 1.5610 level from the current market price. So I guess since I have just some 20 seconds to go, I will just shortly cover the technical indicators, which are actually pointing to the downside right now on the 30-minute time frame. So they are actually bearish on the pair at the moment, but we will see. We will see the initial market reaction, I guess, in some couple of seconds when we are going to have the data. So as you can see, the pair is at the moment somewhat losing value, but not that strong one. So a decline of just 10 pips. Actually, we have somewhat worse than expected data. So the retail sales added just 0.1% in July, even though, as I have already, and Polina, we have already said that the projection was for a rise of 0.4%. At the same time, the June data was revised upwards to minus a 0.1% decrease. And concerning the retail sales on the annual basis, there is also a slight miss on that indicator. So a yearly increase reached 4.2%. At the same time, even though we have had the initial market reaction to the downside of some 15 to 20 pips, it's not that strong as it could be anticipated, and actually the pair has already recovered these losses in the last couple of seconds. So possibly pricing in at least an increase in the headline retail sales, and also on the core basis we have had the data which was in line with expectations. They rose by 0.4%, as you can see in the chat section, which means that the car sales, which are excluded from the core reading, core gauge, were affecting the retail sales the most in July. So I guess that for now that will be all from my side for now and for today. Thank you very much for your attention. I wish you all a great day ahead, and of course the profitable trading. And for now I give the floor back to you, Polina.
Thank you, Max. Thank you, our guests and viewers that participated. And yeah, once again, to sum it up, the retail sales month-on-month data came out at 8.1 compared with the expected 0.4, and the previous did at minus 0.2. Yeah, I'll not take any of your precious time at this point. Thank you very much once again, and please give a warm welcome to Lukasz, who will continue his webinar on wanted box Renko price action scalping. Lukasz, you're very welcome to continue.